Capital markets tend to act as barometers of any economy, and in Nigeria's case, the prolonged economic downturn directly impacted an array of products and asset classes on the Nigerian Stock Exchange. The NSE industrial average recorded the steepest drop of the year at 26.37%, a result of severe difficulties faced by companies in accessing capital for imported raw materials. In the exchange-traded funds market, tracking to this methodology, the Vertiva Industrial ETF recorded the largest price decline in 2016 of 20.51% when compared to ETFs in other sectors. On the flip side, the NSE New Gold ETF saw a sharp increase as its value climbed 94.73% during the year, a clear indication of investors' flight to safety sentiment. Generally, we saw a 19.41% increase in ETF assets under management listed on the exchange from 2015 to 2016, primarily due to the listing of the Vertiva S&P Nigerian Sovereign Bond ETF. Further indication of the equity market's link to economic dynamics is reflected in the drop in NSE Oil and Gas Index, which declined 12.31%, mimicking the 22.01% decline in real GDP growth of the oil sector by Q3 2016, driven by output and distribution complications. Real estate investment trusts declined by 49.8% and 47.1% in value and volume traded, respectively, reflecting the macroeconomic impact of the real estate sector, which declined by 7.37% in terms of GDP. Inflation had a converse effect on activity in the fixed income market during the year. Inflation spiked above 18% by Q4 2016, driven by rising prices of imports and structural deficiencies in power, transportation, and production. The high rate of inflation forced the Central Bank of Nigeria to raise interest rates to 14% in July of 2016. Consequently, the value of bonds in the market depreciated, increasing investors' appetite for portfolio diversification via interest rate products selling at a discount. This resulted in a 137% increase in the value of bonds traded on the Nigerian Stock Exchange in 2016, admittedly from a low base. We also saw a 31.17% improvement in bond issuances during the year. After peaking at 31,071 in June of 2016, an increase of 8.48% over the 2015 closing value, the NSE All Share Index began to retreat to negative territory as total foreign inflow dropped 45% between June and July due to, one, loss of confidence in the implementation of an announced free-floating FX regime, two, weak corporate performance, three, second consecutive quarter of negative economic growth in the period, resulting in the economy entering into a recession officially. In addition to sluggish performance in secondary markets, primary market activity was non-existent as there was no IPOs for the year, although there was one new company listed by introduction in the period. NSE strategy execution in 2016. Building on the successes achieved in 2015, the NSE remained steadfast in the execution of its strategy despite the challenging environment. We also ramped up our engagement with government at various levels to advocate for market-friendly policies and initiatives that can drive economic recovery. Highlighted below are milestones achieved in 2016. Business development. Demutualization. We concluded due diligence process established member relations desk and a credible member register, and developed a roadmap to demutualization. We have had several engagements with key stakeholder groups, such as exchange members, the Securities and Exchange Commission, the National Assembly, the Corporate Affairs Commission, etc. Also engaged extensively with key stakeholder groups, such as the National Assembly, Central Bank, SEC, CSCS, Bankers Committee, etc., and started the product development in earnest. 3. Monetization of Market Services Suite. We launched 13 new products and implemented the first market data conference in Nigeria with additional plans to onboard the first set of clients for the regulatory consulting services business. Our outlook for 2017. Global economic outlook. The global economic growth is projected to reach 3.4% in 2017, according to the International Monetary Fund, while Goldman Sachs' chief economist puts this estimate at a range of 3% to 3.5%. From all estimates that we've seen, they all suggest that there will be a positive global growth in 2017. From the NSE's perspective, we believe there are specific factors that will determine the pace of global economic activity in 2017. These include political developments in the West under the emerging New World Order, as populist sentiments towards nationalism and protectionism and protectionist economic policies take effect on global trade and immigration. 2. Pace of global fiscal and monetary policy implementation. 3. Oil price averaging $55 per barrel as forecasted by the World Bank, following the decision of OPEC to limit output and a subsequent improvement in the outlook for commodity exporters. And 4. Continued growth in Asia's largest economies, China, India, Japan, and recovery of other emerging and developing economies, including sub-Saharan Africa. If you look at sub-Saharan Africa specifically, the projection is to grow at 2.9%. This is from an expected growth rate of 1.4% in 2016. Nigerian capital market outlook. Nigeria is expected to recover from its recession in 2017 with a modest GDP growth forecast of 0.6%, driven by 1. Vigor of fiscal policy implementation with a key focus on articulation of desired goals. 2. Lower rates of disruption to oil infrastructure from resolution of the Niger Delta conflict, thereby increasing FX inflows from crude oil sales. Crude oil prices remaining above the federal government's benchmark of $42.5 per barrel. And 4. Positive impact of the war against corruption manifested in ease of doing business improvements. 5. Policies aimed at boosting economic productivity. For example, improved budgetary allocation to capital expenditure, exit from JV cash call arrangements with international oil companies by the government, which is expected to save the country over $2 billion annually, and other such policies. Notwithstanding the foregoing, the Nigerian capital market will have to do a better job at promoting its unique value proposition to both global and domestic investors. Monetary policy will continue to play a vital role in determining activity in the market, with forecasts for inflation expected to moderate due to the base effect. We believe that all things equal, monetary authorities will have more flexibility with respect to interest rates and FX regime. Hence, good coordination between fiscal and monetary policy should result in resolution of the aforementioned structural deficiencies and drive economic growth. We expect investors to continue to keep a close eye on the divergence between the interbank FX rate and other exchange rates in the country in the short term. Accordingly, a convergence of FX rates in the country and the performance of listed corporates will determine the level of market activity in the short run. NSE strategic outlook. Cognizant of the ever-evolving economic realities on ground, the NSE will take an adaptive approach to strategy execution in 2017. In the immediate future, the NSE will focus on achieving its goal of becoming a more agile and demutualized exchange, and will fast-track efforts towards developing innovative products such as exchange-traded derivatives to provide investors with tools to better weather economic realities in 2017. We intend to strengthen our thought leadership efforts with policymakers to drive policies that will free up the system and promote the ease of doing business in Nigeria. We believe that, one, incentive schemes for sectors of the economy that can support a pivot to export-led economic growth will be beneficial. Two, systematic removal of impediments to doing business and therefore reduction of leakages will attract private sector investments. From a capital market liquidity standpoint, we will enhance our cross-border integration efforts via the African Securities Exchanges Association's Africa Exchange Linkage Project model and the West African Capital Market Integration Program. We will also continue our engagement efforts with the government to promote the listing of privatized state-owned enterprises, as well as engage with the private sector issuers for listings across all of our product categories.